Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, May 10th, 2021, and I'm pre recording this Trading Places Live for Tuesday, May 11th. Futures not looking particularly good this evening after a pretty rough day on Monday, especially on the Nasdaq. We're seeing further selling on the Nasdaq. Really, futures are red across the board. Dow futures down 127, S&P 500 futures down 28, Nasdaq futures down 153. So on a percentage basis, almost twice that of the S&P 500. Really not looking very good. Looks like the tech sell-off that we saw throughout Monday set to continue on Tuesday morning unless we see some changes overnight. Looking at our agenda for the day, we'll start off with that daily market recap as we always do. I'm going to get into talking technically, looking at some of the indices around the world. Then we'll get into chart breakouts, topping candles, a number of those today. So I thought I'd go through some of those, point those out. And then we'll get into earnings spotlight and wrap up the show with 3 you must see. Before we get into any of that, though, I'd like to take you over to earningsbeats.com. If you're new, I'd love to have you sign up for our free newsletter. You can simply type in your name, email address, hit that subscribe button. We publish the newsletter 3 times a week, Mondays, Wednesdays, and Fridays. Before the market opens, you'll get your copy. And normally it has to do with relative strength, earnings, those types of things that are really important to us at Earnings Beats. And occasionally I think you'll find a pretty good trading candidate that comes out as well. But for the most part, we do use the newsletter for educational purposes. So looking at the action on Monday, getting into this daily market recap, you can see the Dow Jones. I don't like that candle. It was a gravestone doji. We've seen a bunch of those in the market. And what makes it even worse is that it occurred. You can see higher prices. There's that gravestone doji where you've got a long tail to the upside and your open and your close is down near the bottom of the candle. The problem with this on Monday is look at the PPO on the Dow Jones, much lower. So you've got higher prices, lower PPO, so you got a negative divergence, and then throw in that reversing candle to boot. Same goes for the S&P 500, higher prices, lower PPO, failure to hold that breakout. We just broke out on Friday to a new 52-week and all-time high, and we gave it right back, and we did so with a negative divergence. So I think short-term, we've topped, and I wrote about, I wrote in my blog last weekend about the potential top in the market that I was seeing some warning signs. And you might want to go back and check that article out. I'm pretty sure it was in the Trading Places, my Trading Places blog. But negative divergences and reversing candles and those types of things just to add to the bearishness. Look at the Nasdaq. Nasdaq down 2.5%. The Dow was down just 0.1%. The S&P was down 1%. Nasdaq 2.5%. Big move. So after selling off from that 14,250 high, again, that was the day when we saw Microsoft, or no, it was Apple and Facebook came out with just blowout numbers. We gapped up, looked like we were ready to take off on the NASDAQ. That was the top. And believe it or not, we're probably down about 900 points now since then. So the NASDAQ not looking very good, closing back below its 50-day moving average. I think we are clearly sideways consolidating. And the fact that we lost the 50 in these recent lows, I think there's a chance we go back here to 12.5 on the NASDAQ. So that would be another 900 points from where we are now. That would not be good. With negative divergences, I'd be looking for the Dow and the S&P maybe for a 50-day test. We haven't seen one of those in a while. But again, with a negative divergence, that's what I'd be looking for now. Mid caps and small caps, mid caps double top in. Failure to hold 2,700, and I think we could probably move back down another couple percent below that. Small caps, big reversing candle on Monday as well. We had not yet gotten up to that recent high, so I think the sideways consolidation continues here. So just not a good look on the charts with that reversing action on Monday. Utility. Now, one thing I'll just say, if we can break back out to new highs, it negates it. But I would think the probability is that we're going to see some lower prices ahead. Utilities leading along with staples, two defensive groups. That's also not a good sign. I know we saw mostly selling, especially in the afternoon, but still, anytime you get the defensive groups leading the market, that's generally not good for the overall action. And on the bottom, you see technology, communication services, discretionary, the three aggressive groups, and technology in particular, very, very weak. 135 is where we had this inverse head and shoulder. So we had move up, left shoulder, neckline, head, right side of the neckline, right shoulder, and a breakout above that 135 level. We're back testing it. So if you're looking for that breakout, that which now becomes support, if you're looking for that to hold, we're going to need to see a reversal on Tuesday. I'm not going to rule it out, but just the way the technology is trading after earnings reports makes me doubt that that 135 level is going to hold. Communication services, I think with negative divergence, we keep trying to go higher. PPO has been lower. I wouldn't be surprised to see 75 here, which would be about another couple percent at least to the downside. And then discretionary, also with that PPO rolling over, I wouldn't be surprised to go back down and test this gap support area, the 50-day moving average, all of that in about the 170 to 173 area. That's what I'd be looking for on the XLY. So we're talking about another couple percent there as well. 10-year Treasury yield. First off, on Tuesday, we are expecting very little in terms of economic news. So I think the 10-year Treasury yield is literally just left to trade sideways. 150 to the downside, 175 to the upside. We closed up 2.5 basis points on Monday, finishing at 1.60%. And as long as we continue to remain in this uptrend or in this sideways consolidation, I would expect to see financials and industrials perform well on a relative basis. That's what we've been seeing. We've just gotten new breakouts on both of them, and I think that's bullish to see that. All right, let's move on to talking technically. So I want to get into some of the international indices. Haven't looked at these in a while, so let's see what we have here. First, we've got the German DAX. The DAX did finish up fractionally on Monday. Not quite breaking out. So we're in an uptrend, but I think we've got a high established just above the 15,500 level. So another 100 points that were shy there. To the downside, I think that recent low down around 14,800 is a low to watch because you've got the 50-day moving average coming in at 14,869. So that combination right there should hold. And then you've got the recent breakout, which looks like it came at about that 14.8 level. So all of that combined, I'm going to say 14.8 to 14.875, somewhere in there. Like to see that level hold on or as support. And with global markets looking weaker here, I suspect that you're going to see the German DAX down on Tuesday and perhaps significantly so. We'll see. Moving on to some other areas. How about the Hang Seng? So the Hang Seng was down, I haven't looked recently, but I want to say it was down about 400 or 500 points, back down close to 28,000. It might have been almost right on 28,000 last time I looked. I believe we're going to go to 27.5 to at least test that level. But I would watch 27,000 as a major support level because that's where we broke out back at the end of December and really didn't even look back, just went straight up from about 27 to above 31,000. And that occurred in just 45 days. So we've been working our way back slowly, but I wouldn't be shocked to see us move back down to about that 27 level. And that's where I would look for some significant support to kick in. Let's see, China, Shanghai. I know we were down there probably about 2/3 of 1% last time I looked. I think we were just a little above 3,400. I see some pretty good support coming in about 33.50. I mean, if you go back to the lows in December and again in March, a couple of, that double bottom there. Then in April, we got down to about 33.70. So I think we've got a shot here to make another push back down to about 33.50. To the upside, it would be bullish if we could get through 3,500. We've had multiple tests without the ability to get through there just yet. One more. Let's see. Let's go. Yeah, let's go to Tokyo for the Nikkei. Now this one was down quite a bit. I want to say 600-700 points last time I looked. So this chart is showing the close from the prior day. It's not showing the overnight action. So the overnight action's down considerably. We'll see whether or not we can hold on to about 28.4, 28.5. Failure to hold that level, I think, probably takes us back down to about 27.6. And that's where I'd really like to see this the market hold over in Tokyo. All right, let's move on to chart breakouts. So I just have a couple of them here. There were a lot of new 52-week highs, but I went through a lot of the charts, and many of them were intraday highs where we saw reversals. So I thought maybe I would just take a look at a couple of charts that I thought looked very interesting to me on breakouts. The first being Peabody Energy, BTU. And if you look across at the top here, all the way back to June, which was just above $5, and then you come in January of 2021, we moved through $5, couldn't hold it. And then in February, got to little above $5, couldn't stay there. And now for the first time, look at the volume come in on Monday to support this move through that $5, $5.10 area. So I think Peabody Energy is looking pretty good here, BTU. And I wouldn't be surprised to see some additional strength in the days ahead. Now, it's very volatile. It was $3.50 just a week and a half ago. So the fact that we moved up through 6, could we pull back and test that 5 level? Absolutely. We could even possibly pull back, hit the rising 20-day moving average. I wouldn't think it would go below that. But from 591 down to 431, I mean, we're talking better than 20%, maybe about 27, 28% from the high to get back down to the 20-day moving average. So just be aware that the volatility is going to be likely to be very significant. And so if it were me and I was looking for entry on this breakout, I would be tempted to wait to see if I could get a pullback, whether it's now or whether it's sometime down the road. It's just a little overbought and a little bit stretched here for me. The other one I wanted to point out for the chart breakouts was Nielsen, NLSN. I love that AD line that has followed price action to the upside. We had gone up to almost 27, sideways consolidated for nearly 2 months. And then just in the last couple of days, very, very nice action. Look at the volume accelerating to the upside as well. It's part of a strong group that's just broken out. And on a relative basis, after pulling back for a couple of months, we're starting to see more relative strength relative to its peers. So I think Nielsen looks very interesting as a breakout candidate as well. Similar to BTU, I'd prefer to get this on a pullback. I really like it in the 26s somewhere as it gets closer to that rising 20-day moving average. So I just think that takes a little bit more of the risk out of the trade if you can get the stock to pull back maybe $1, $1.50. All right, let's move on. Topping candles. Now this is, and I could have probably listed 100, 200, maybe 300 stocks with topping candles. So I'm just going to pull up a few that really stuck out to me as I pulled up the charts. The first one, we know copper has been absolutely scorching, and Freeport-McMoRan's a stock that benefits from the higher copper prices. But this stock, after going sideways, it had been up quite a bit over the last year. It's been one of the leaders. We went sideways, really struggling to get through about 38, 39. We finally did that as we opened up May, got up as high as 46. So from, 7 trading days ago to the high on Monday, we probably went up 25% just since the end of April. And that's on top of what already was a super run. But that reversal right there, it doesn't look like it's bearish engulfing. It looks like dark cloud cover, reversing candle, but look at the volume. So we've gone up, up, up. We gap up. We're trading up to 46.10 intraday. come all the way back down, close at 42.74 on 53 million shares, which is, like I said, the highest volume day of the last year. So I don't like that kind of reversal with that kind of volume. Now the PPO looks good. I think overall this chart looks good, but I would not rule out a move back down to about 39. And that would be, maybe an 8% decline from where we closed on Monday. All right, SLX. So we know that steel has been strong. This is the VanEck Vector Steel ETF. And similar to what we just looked at on Freeport McMoran, we had this huge run up here in May. So from the April close through the first 10 days of May, we had this very steady move to the upside, very strong increasing volume. And then on the heaviest volume by far that we've had all year, we printed a black candle off of an uptrend. I think that's a significant top. Now it gets negated if we can move back up and take out the high, but I would expect that we've topped and that the SLX is probably going to head back down, maybe even to that rising 20-day moving average. We've seen multiple tests of the 20-day over the past few months. So don't be surprised if we get another one maybe down around 61 or 62. CLF. This is Cleveland Cliffs. And once again, big reversing candle, dark cloud cover, heavy volume, almost 40 million shares, 36 million shares, which isn't the heaviest volume day. But when you look back, there haven't been many over 36 million, maybe a handful. So this was a very strong volume day. Stock got up as high as 22.90 before closing at 20.71 near the low of the day. So with that, I believe we could see a reversal back down, possibly to 19, which would be that rising 20-day moving average. That's what I'd be looking for. All right, Tenet Health, THC. That is a bearish engulfing candle off of an uptrend. Look at the volume pickup. That tells me we probably saw a top on THC. Now, again, I'm talking short-term tops. I'm not talking, that this is starting a bear market, that kind of a top. But from a trading perspective, it's really important to identify these tops. I mean, if you look at it, it looks like a bearish engulfing candle. We had one of those back here mid-March when we topped. That's generally a sign that we probably need to pause for a little bit of time. Also off of uptrends, when you get that black candle like we saw back in October, that occurred right at a price resistance level. And you can see it was just a struggle. It didn't stop THC from going higher, but it did put the brakes on for a period of time. So I think that's what we might be looking at here. Oceaneering, OII. This one really looks bearish to me. We had a breakout on Friday of last week. Volume was strong, and on just strong a volume, we gap up, come all the way back down, print this dark cloud cover candle. I think we're going to go back down probably to the 12 to 12.5 area to maybe take a look at that 20-day moving average, possibly the top of this gap. Somewhere in that range is what I'd look for on OII. Just a few more here. Acuity, AYI. First off, we had higher prices. We got the lower PPO, negative divergence. Now on this breakout with the negative divergence, you can see the volume was pretty strong. But over the course of the last week, as we've tried to break out, and then we had a failure on Monday. But on that failure, you can see volume is just drying out. So I think we're running out of buyers here. And with a negative divergence, false breakout, closing on the low, I think we're going to move back down to the 165, 170 area here on Acuity. GPS, this is Gap. The thing that's gotten my attention here is the two heaviest volume days over the last month or two occurred with tails above 36. Couldn't get the close above 36, but we had intraday action above 36. And Monday's high actually got to 37.06 before closing near the low, 35.66. That right there, I'm going to blow this up. Maybe we'll just look at it like on a 3-month. I want you to see this because this is a gravestone doji, essentially, and off of an uptrend. That can be bearish. We've already failed that 36, 37 area once, now a second time, and this is what I was talking about in terms of volume. the big volume to open May. Couldn't get through that 36 level on a close, even though we got up to 37 intraday. Same thing again on Monday. Big move up, 37.06 high, came back down, closed below 36. So it looks like we're getting some selling up in that area. Don't be surprised to see maybe a pullback to test that rising 20-day. All right, last one I have for you is Blackstone Group. So this is over in the financials. This is another one that just looks like a top has formed. Look at that PPO rolling over. We had a new high early in the day and then printed, looks like it's just shy of a bearish engulfing. I'm going to call it a dark cloud cover candle. But dark cloud cover, false breakout. We had the breakout and we lost it. So you can see the higher prices, higher close, and lower PPO. So we got a negative divergence with a bearish reversing candle in play. Now, when I see that, I start thinking not 20-day, I start thinking 50-day. Now, the 50-day continues to move up, but we could perhaps move back close to 80 or maybe 81, 82. I'm going to say 80 to 82 in this range is what I would be looking for on BX. So I think we're likely topping there. All right, so those were just 8 or so topping candles, but they were all over the place. There were just so many of them. Really makes me think the market probably has finally reached a point where it is ready to sell off. We've already seen it in the Nasdaq. Don't be surprised if we see some bigger selling in the Dow and S&P 500 in the near term. All right, moving on. How about earnings spotlight? I tell you, there are 8 stocks after hours tonight that are getting some pretty big reactions. 4 to the upside, 4 to the downside. So I'm going to go through those pretty quickly and show you what we have here. So first up is Novavax. Novavax down almost 13% after hours. They were expected to lose $2.65. They lost $3.05. So we're talking about a big breakdown here below this 150 level. I think that's a problem for Novavax. I think we're likely to fill this gap. And I don't know if we don't do it at the open, I certainly would be looking for it intraday. And that would be at 134.01. So I don't think we were that low after hours. Maybe we were 138, 139. But let's look to see whether or not we can hold that gap support. If we do not hold 134, then I think we've got more selling ahead in Novavax. All right. Let me give you the ones that just all reacted poorly. So let's go to Virgin Galactic, SPCE. Another one that missed its earnings expectation. There was an expected loss, 31 cents. They lost 55 cents. Stock is down 9% after hours. That's on the heels of 8.5% during the day on Monday. So we were looking, I think we were down 16 and change, but looking back, 14 to 15 isn't that far away at this point. And that's where we've seen a lot of bottoms. So I'd be looking for that on SPCE. Another one, SAIL. This is in the software area. And software stocks are just not being treated very well. SailPoint Technologies in a downtrend. I think it's pretty clear. You can see keep putting in lower lows, lower highs. They were expected to break even, and that's exactly what they did. No beat. Came in right where it was expected, and the market didn't like it. Stock down almost 10% after hours. So it looks like perhaps we'll be challenging this gap support level over here. And on sale, that number is 39.57. So we'll see whether or not we can hold 39.57. One more that was very weak. This was one of our portfolio stocks. This thing has been all over the place this quarter, but mostly lower lately. And that is Vuzix, VUZI. Like many of these growth stocks, stock has just been tortured of late. They reported after the bell, they lost 12 cents. The market was only expecting a loss of 10 cents. So it was not a good quarter for VUZI, and the stock down almost 10% after hours. So we're looking at probably 15.5 or so. I would be watching this prior low here, which was down at about 13.5 area. That would be a level that I would be watching pretty closely to see if that holds. Now, on the flip side, we did have some stocks that reported and responded pretty nicely. First one is Brooks. Now, before you get too excited about Brooks, I will say this. Many of these technology stocks that have gapped up after earnings have not been able to hold it. So Brooks, good news, up 8.5% after hours. They reported a gain or net profit of 69 cents. Market was only expecting 51 cents. So it's up 8.5% after hours. But the question is, does it hold? What we don't want to see is a gap up and then another big filled candle where we come down and we lose support at about 89. Next up, Everbridge. Here's another software, EVBG. And this is another stock that's been under a lot of pressure, not far from a 52-week low, which is kind of amazing. Didn't really participate on the way up with software last year. You can see software kept going up, up, up. Everbridge didn't, and as a result, relative strength was not very good there. Stock was expected to lose 11 cents, and it had profit of 18 cents. Stock was up 6% in after hours. But we have had 5, 8, 10 consecutive days of filled candles. That's where you close below the open. So Everbridge not looking particularly good here, in my opinion. We're looking to gap up in the morning, but we'll see whether or not it holds. Two more that actually did pretty well with their earnings. Eli, which is Callaway Golf, expected to gain 12 cents or expected to post a profit of 12 cents, and they posted a profit of 62 cents. Stock up 7.5% after hours. So if we can get the breakout above $32, and it'll be close, the number I would watch for on the opening bell is 31.86. Do we open above that? If so, I think that would be a good sign. Last one, DDD, saved the best for last. Stock up 14.7% after hours. But stock has also been down quite a bit. So let's watch to see if we can get through the 20-day moving average. My guess is we probably won't. But that has been the way that most of these technology stocks have done. We've seen gap ups, then we've seen failures. All right, let's move on to the 3 you must see and wrap this thing up. First up, Trade Desk. I'm talking about these technology companies that gap up or gap down or whatever, but then sell off after earnings. Trade Desk gapped down and then really sold off on massive volume. Stock had already been under pressure relative to its software peers going into the report, and now even more so. I mean, they beat on their top line. They beat on their bottom line. I think they raised their revenue guidance. They announced a 10-for-1 stock split, and the stock went down 26%. That's what you get for all of that. Marriott, your second 3 you must see stock. Marriott, 80 line's been rising, even though price has been going down. We'll see whether or not we can hold. I think 135 to 140 is really good support here on Marriott. I expect it to hold there. And then the last stock I have for you is Gilead Sciences. AD line just set a new high last 7-8 months. Price action trying to get a close above 68. Watch to see if we get this. With healthcare moving back into favor with the market weak, maybe some of these healthcare stocks get a breakout. Watch for $68 on Gilead. All right, that's it for me. I want to wish everybody a great Tuesday. Hopefully the market recovers from these weak futures. But I'll be back on Wednesday over at Trading Places, over at Earnings Beats for your next Trading Places Live. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.